Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the Russell right now. The last few days, you can see the ABCD measured to 2388, and the low was 2387. So that was also off. So got to work on that. Having a little bit of a rally today, folks, but this is a pretty significant bottom here. If we look at this on the 4-hour chart, which we're going to right now, you'll see that we hit some pretty good support right down in here. And if you move this over just a little bit like this and bring this over and bring it way back here so you can see another low from back there, we just made a retracement off of this level right here. I'm going to draw it in so that you can see it. This is not the end of the world type thing, folks. This is just a correction that we're having. There's your major low right here. There's your ABCD right in here, if you can get that drawn correctly. And you'll see that the low was, drum roll please, none other than Mr. 618 himself. And as you draw it in, there it is right there within 1 point of the exact 618 retracement. Okay, now let's talk just a tiny bit about the gold market, okay? Let's move on here. Oh, we should talk about the bond market. The bond market is one that looks pretty interesting. So let's get this up here and take a quick look at it because it had a little bit of a retracement today. You can see there's the pullback. We didn't quite make the ABCD. It missed the buy point that we were looking for back in here, but there's still a chance that we're going to make up a little bit more movement to the upside if this flight to quality, continues to move the way that it's been going, okay? So that's another one. The next one we want to take a look at, and remember we told you about this, there was something big happening in Denmark, and that's over where the euro is. And as you can see, folks, there was our big move we had in Europe. Remember we had the big ABCD down in this area. It went below it by just a little bit, and then it had that big snapback. And if you remember, we were watching this hourly chart because of this big move that we had right here. You see that? Boy, folks, that was telling you this thing really wanted to rock and roll. It couldn't even make a 382 retracement on this, folks, last night. This is when you came down just a tiny little bit like this, and I saw it, I should buy that breakout. And look where it went to, exactly to 0.618 of the previous high. But this is not a 382. As you can see, I'll get this out of the way. It didn't make it. It was just too darn strong, and could be short. Well, it doesn't make any difference who's covering it or not, but you can see here we missed by almost $400 or $500, and so that certainly doesn't count for a Fibonacci number, but it didn't hit. But it will count for an ABCD, and if you put the ABCD on this, tells us that we're going to get just right up here, just a little bit higher, and then we have to look at it again because we still believe long term that this picture in the euro is very, very bearish. I've shown it so many times that I don't want to short again because it's really just wasting time, I guess, more or less. All right, let's move over here and talk about a couple other things. The main thing is about the stock market, folks. We've started something down. It's very, very orderly today, folks. There's nothing crazy or anything like that. I mean, there was just some reports of here and there, all that other stuff that was going on, but it doesn't make any difference because, these are markets that people listen to every day on Bloomberg. And by golly, folks, I have an announcement that you are not going to believe. Buckle your seatbelts. Donald J. Trump is wearing a brown suit and a gold tie. He must be an imposter. He's never worn anything but blue or black. Uh-oh, something's wrong in Denmark, folks. Let me know what you find out. Okay, let's get over here and talk just a little bit more about this NASDAQ because I didn't show that one. This is the This is the program that we were looking at today for the NASDAQ. You can see that it handled it pretty good, but we came all the way down. But let's look at it from a long-term perspective, because this one was really right on the money here. We'll get up here and we'll look at it on the hourly chart. And you'll see there's where we were. Went a little bit below it by just a little bit, but we'll get it here right. Oh, you know what? Let's do 4 hour because it's so easy to see compared to the clutter of the 1 hour. There it is right there, folks. You can see the ABCD pattern. We move it over just a little bit. We probably stopped. Well, there you can see there's your A, B, C, D. Let's just see how close we came. Well, it looks like we missed it by 1.618, but let's measure the ABCD from the high to the low. And that's this pattern right here. And there's your pattern right there. And that's measured into 24848. We went below that by quite a bit. Yeah, we did. We went below it by 100 points. Right now at 2870 is where we are right now as the market's rallying a little bit over this period of time. The AI program, one of those days where it was right. And you can see here we had a little bit of a pullback right here. And that tells us that we're most probably getting ready to at least do an ABCD pattern on this little puppy up in here at 249, okay? So that's one that you'd be watching. Let's just look at this from a standpoint of Fibonacci and stuff, folks. First, what we're going to do is get rid of the AI and put up the 3-minute chart because we can see it really clearly. Now, here's the action that we have going right now. We've got an ABCD pattern that looks like it's coming up here to about the 249 level. Where does that come to? Yeah, 249.22. So we put that in there right there. Now what we have to do is to go back and see if that's going to be a 382 off of any high that we had here. So we got to spread this in together. There's your high right back here. Boy, that's not even going to be close to a 382. That was the middle of the night high, folks. That's what that one was. Wow, it doesn't come too far away. Look at that. That's awfully close to the old 382 off of this. So keep an eye on that one. That's that's only off by about 20 points. So very, very interesting. We got to watch that one for sure. Okay, now let's move on to the corn market. Someone's asked a question about corn, and they're harvesting it now, folks, and it's coming in pretty good from what they tell us. We'll put up Christmas corn here. The greens got hit pretty hard because they had the big run up and they've had a sell-off. That's basically, corn is sold off very little, folks. 8 cents in corn is nothing. That's just, there's nothing at all to make that thing do that. So listen, this is where we are here with the corn. And you'll notice all we're doing is going sideways here for 3 weeks after the big bottom we had down here. It's going in, we're setting at the 50% level, nothing much to talk about. But there is something to talk about with the gold market, folks. I want to bring this to your attention because I really thought we had a chance with all this stuff going on today to hit our objective of 40.60, but we didn't quite get there. We're going to cover it here in just a minute, and we'll get the hourly chart up here. Okay, see, here's where we were really wanted to selling it up here at this 40.40 level, 0.618, and we missed that by 5. Unfortunately, that's it. But all it's done today is just jump around quite a bit. Now, this is we move this up so you can see what we're talking about. There's where we are. This long term, folks, this is not even a 3. Let's do the 4 hours so we can see it. You can see those big highs back there. We'll be right back. Stay tuned, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is the NASDAQ. As you can see here, there was your first 382 this morning, right, 7 o'clock New York time. The market kept going down. Then it had another 382 retracement right there. And remember, folks, when a 382 comes in, it comes with the signature of the ABCD pattern, because there's your A leg right up there, B leg, C leg right there. That tells you that this is a low right here. What does it do? It rallies right up to the 382. Oh my goodness, I'm a poet and didn't even know it. Let's get over here and we'll show you what I'm talking about, because there was the first 382, and then you have the second one coming in right there. It's this one right here. It's the larger one because it goes down a little bit longer. And you'll see that it also goes right up to the old 3.8. This one goes to the 50%. But what does it do? It also tells you that you're getting right down here, making another ABCD pattern. Please don't tell anybody about this ABCD stuff. It's very, very hard to figure out, and you don't want to mess with it. But there's your low today, right on the money, folks. Anyway, that's what we're paying attention to here so far. You remember we got this, it's heading right up to this number right now that we're seeing. I've got that limit minder in right there because I am going to be taking profits at that point, and we'll see what happens. I bought one down here just for kicks and giggles, just to see if it would work. All right, let's move over and talk a little bit more about the price of Tesla. Mr. Musk got a raise. I don't understand how they can only pay him $1 trillion. Is that per month, or is that going to be a yearly, or is that lifetime? Or that's a lot of money, $1 trillion. I think it's a great way to look at it. Anyway, you can see Tesla. Evidently, they're going to take it out of his salary because it's coming down pretty hard today. But that's neither here nor there. Let's clean that out just a little bit, and we'll see where we really are. Oh, look at these nice little ABCDs pattern. There's all over the place. Look, there's one right here. Here's the big one right here. We got this one right here, comes down, and we know we're coming down really hard, so we have to extend that out by 1.27. I'm going to have a whole program on this, folks, and how to trade strong trending markets next Friday. If you want to join me, it's going to be worth it. There's your ABCD leg. The reason why, you've got a gap here. That means it's heading lower. It's not just ABCD. Look what you had here. Yesterday and today, we were talking about that. There's your high yesterday, your low yesterday, and what did you do today? Let's just double check to see if it completed the ABCD. And I can tell just by looking at this, I do have it right here. And you'll see there's where we go right there. Oh, it didn't quite make it on the downside. So that's, oh, you know what? Because I hadn't changed it. This is still a 127, folks. So it does hit it spot on. And that's all you have to realize is that's what you're looking at now. This should be pretty good support in here. Now let's go over here a little bit more and just bring it over so we can see the big bottoms, because this thing's been going straight up for a very long time, right? So we've got a major bottom right back here, back on October the 10th, all right? And remember, we have all this astro stuff due today, so this is probably why we're getting the bottom day. You draw that in, and where'd you stop at today? Right at the 0786. So as bearish as I am not short. I covered what I thought was the thing to do, and whether it's right or not, I don't know, but that's what I do. I can't do anything more than AB equals CD. That's my fault. Let's take a look at, no, where is it? Alibaba. Someone asked about Alibaba this morning. Baba, I know that was one of Sarah's favorites. Okay, here's Alibaba. That's probably been getting the tar kicked out of it. It's not a very good stock. Let's just put the daily up. You'll be able to see it here. I mean, it's a good stock, just not performing well. Okay, you can see we had this big rally, but folks, this used to be a $400 stock. Take a look at the weekly. You'll see what I mean. Way back in here, you'll see that's only a 50% retracement. So you go back and look at the stock. See, it was $320. All we did is go right up to the 61 or 50% retracement with an ABCD. That's also a 3 drive to a top pattern that goes on right here. And that's the main thing. The one thing I do want to stress today, and it's going to be in the newsletter quite a bit. I've been talking for weeks and weeks and weeks, ever since February. You know, we've been looking for a pretty good high. I thought about all the ABCD patterns that I've seen all over the world. Some of them have gone crazy to the upside, like Google and a few others, but most of them were hit pretty much spot on, and they're all finished. And that's, you know what that means, folks. The train is leaving the station and it's driving south. It's not going north. So get ready to learn to be a short seller, because that's going to be the easy way to trade it. And you can see something like this in Alibaba, where look, it just 382, 382, 382, and people try to buy this all the way down. That's exactly what's going to happen now with that margin that they have. This margin that they have, it's 1.1 trillion. They're not nothing to get out today. The NASDAQ was down, what, 300 points, the Dow's down 200, S&P's down 50. That's nothing. You know, that's 0.5%. So it's nothing panicking about. This was just completing patterns today. That's all it was doing. Mike Knorr will be our guest, and he wants to talk to us about the S&P having something really big happen to it today. But let's take a look at crude oil, because we were waiting for a big bottom here in crude. I haven't checked it today, folks, believe it or not. I've had other things in the mess house. We're really close. There's where we are. And we want to get this out. No, it's still got a little bit more to go. Sorry about that. Yeah, this is what we have right now. We're thinking we're going to get to here. That's the 61% going back to the big October low right here. And then you'll see here, this is where it comes in. As you look at it closely here, it's going to be a pretty easy one to pick out. Let's just clean this up a bit here. You can see the lower highs, okay? So that means we're still heading down, and all we need to do is to get it right there. And so all you have to do is to go back and go to your previous high right back here. You draw that one in right there, and it tells you went to there just like you should have. That means this one's completing right here, and we're getting pretty close. And guess what's hitting the old number, folks? Believe it or not, we just hit the old Cupid doll. Where is that? I can hear it going on right now, the old NASDAQ. Here it is right now. There it is right now, hitting the number that we talked about. There's that little number going off there. So hit the old, make up for all the losses I take. Anyway, that's what we're watching here right now. I mean, pretty good rally here up to this level. Now, this is important, folks, because this is an ABCD in a bear market. It shouldn't get any higher than right here. So not only did I do one thing, I did the other thing, because I'm still very bearish. So the gives me an A, B, C, D in a bear market. I have to sell it. So I sold it there at 20, and I put my stop up here, 29.60. If it gets to 29.60, I'm going to say, well, sayonara, take a little loss, but I was okay buying it down in here. You can see on this little 3-minute chart where the ABCD was coming in. I look at those because those little micro things tell me that that's how the pattern is completing. You see that nice little 3-drive pattern that's right there? Now, unless you're looking for that, you don't see it. But when you see it with the big ABCD and add it together, holy moly, guacamole. Sometimes it makes pretty good sense. So we're going to see what happens here. Stay tuned. We've got Mike Moore of More Analytics in the house, and we'll have some fun and see how he's doing. Okay? So live every day in an attitude of gratitude, and don't leave. Just be safe.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Mike Moore of More Analytics. Mike, you're looking pretty good today, buddy. You said you had something special about the S&P. Let's start with that one.
How are you, Larry? Thanks for having me on. I appreciate it. Can you see my screen okay?
Coming in good.
Okay. So I'm just going to go straight to the S&P actually, because that's the biggest thing on the docket right here, right now. We've been bullish overall from 3502. So we've seen 3,451.75 into this bull trend, really extended up into it. And then all that was put on hold when we broke below 69.1175. I think we were talking about that on your show last time. So we've come off over 199.5 because we've come down to 66.55.50. And we also left a medium bearish reversal above 3 days ago on the 4th. Sorry, right here. And I would also note that just on a very macro level, I'm going to zoom out for a second, so it's going to look like there's lines everywhere. So on a very macro basis, we're basically holding the bottom of this huge exhaustion level. The bottom of it is at 69.91, and the highs are up here in the 69.50s or whatever. But we're rolling over here. We're sitting right on this trend line, and if we see a solid break below there, we're looking for 320 points plus to the downside. Solid penetration today is going to be 37 points. So 37 points below wherever that line comes in. That line currently comes in at 66.69.73 plus 0.26 per hour starting at 1:30 p.m. Eastern Standard Time. So a 37 point break below there would confirm the bearishness. If we see a solid break below there and then break back above it solidly, I'd be out of all shorts, long, and looking for another possible run up into these areas, possibly even the highs. Now, we also have this formation above, which comes in at 68.14.98 minus 80.87 per hour starting at 1:30 p.m. Eastern Standard Time. And a decent break above there will project this upward 150 plus. Let me just check one more thing before we move from here. Okay. Want to jump into the energies?
Yes, sir. Start off
Okay.
with crude, if you please.
All right. Jump into the crude here in kind of tighter ranges here the past number of days, just drifting down. Okay, so we have been bullish from the break above 57.43. We saw $5.16 of strength from there. A couple of bull calls in here. Those are on hold. Then the trade below 60.91, which was that break below here we talked about on the last show, I believe, got this bearish, and then we got bearish below here, and we've dropped down to 58.83. If we were to break back above this line decently, that's going to warrant a decent strength. That's going to come in at 60.34. plus 0.4 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. Also getting along above that would set you up for being along before we break above this line, which is a more substantial formation, which comes in at 60.69 minus 0.7 of a tick per hour starting at, like I said, 1 o'clock p.m. And a decent break above there will project this upward $1.75 minimum, $6.30 plus maximum. I would also note, though, that the heating oil and the RBOB just turned bearish, so we're going to take a look at those right now. Okay, the RBOB we were bullish, or the unleaded gasoline we were bullish from break above 197.91. We've seen trade up to, excuse me a second, that was below, trade above 176.27. It's brought in trade up to 198.86. A lot of other bullish calls in here. Those are all now on hold as we failed back down through this line right here, which came in at 196.28 this morning. And so that warrants a pressure likely back down towards this formation below, which is going to come in at 192.13, and a decent break below 192.13 plus 64 per hour starting at 1 o'clock p.m. Eastern Standard Time. We'll project this downward at least 6 cents to the downside based off a well-formed formation. We break below it decently and back up through it decently. I'd be out of shorts long again and looking for a rally back up towards this line.
Okay. We have a question about if you could do natural gas when you finish the oil and heating oil and crude.
Absolutely. So the heating oil here, we came up to, first of all, we were bullish from 213.43. We rallied up to 256.76. Now we came just shy of a solid penetration above a major formation up here that came in at 253.99 to 4 even. But the solid failure back below it now warrants a pressure. If we were to break above that line solidly on Monday, though, that will warrant of solid strength for as much as 43 cents plus. And that line's going to come in right around the same spot. It barely moves. The Brent, similar picture to the WTI. The trade below 64.69 brought in pressure, as well as the trade below 63.99. That was the break below here and here. We pulled back up to this line twice. If we were to break back above this line decently, that's going to warrant a decent strength. That's going to come in at 64.20, plus 0.5 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. A maintained gap lower in there on Monday would leave a medium bearish reversal above that would warrant a pressure likely back down towards these lows. Same thing with the WTI. And then the gas oil here, coming off hard from the highs. This also almost broke above a major formation up here, but didn't have enough of a break above it, and then started rolling over here. Now we're attempting to fail below this formation, which comes in at 724.04. Plus 41 per hour starting at 1 o'clock p.m. Eastern Standard Time. That will project this lower. Likewise, if we see a decent break below and back above, that'll be long again.
Okay, I think we got a break coming up here, my friend, so we'll be right back. We got to pay a few bills, Mike, so stay with us, okay?
Yep.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, with Mike Moore of Moore Analytics. Please continue, Mike.
Thank you, Larry. Before we go to the natural gas, I just wanted to highlight something for those of you that follow the energies. And I talked about this a little bit on the last show that you had me on, but the importance of understanding what the unleaded gasoline and the heating oil are doing. As I define in here, I have these little symbols here as to which one to be long or short or whatever. But just to give you an idea here, in the being long the heat as opposed to the crude over the past 2.5 weeks would have netted you another $13,700 per lot. Yikes. As opposed to being long the crude oil. And so the average range of crude oil right now is about $1. So that's almost 14 days ranges more of profit that you would have made being long the heating oil than the crude oil. And even as opposed to being the gas, the unleaded gasoline, even that you would have made $6,300 more, but the heat far and away. So, if you have any interest in that and making a lot more money in the energies than just trading the crude oil like you do, give me a call. All right, so natural gas. We've been rallying here the past number of days. Okay, we've been bullish from 281.10. We've seen $1.60.8 to the upside, a number of other bullish calls in here. The most recent one here, the break above 405.40 projects this upward, 310 ticks minimum, 800 ticks plus maximum. We detained 365 of that coming into this morning. We'd also just broken above a recent formation right here, and we're hovering under this formation. So if we break above this formation, which is going to come in at 440.60, decently, that should bring in continued strength. I'm going to zoom out for a second here real quick. Also, I know this looks like a mess right now, but you'll see in a second. Just bear with me. We are likely correcting against the move down from 575.70 with areas of possible exhaustion here, which we've held once and twice. This level up here at 463.20 to 467.60, and then some additional areas up above. However, those are not really scheduled to hold more than temporarily until after January 6th. So, and if we fail back down below this formation down here, that's going to warrant decent pressure. That's going to come in at 422.40 minus 2.4 per hour starting at 1 o'clock p.m. Eastern Standard Time. Anybody have any questions before I jump to the gold?
Let's go with the gold. Everybody's interested in that. It jumps around like a bunny rabbit, that's for sure.
Yeah. Well, lately, we've had a lot of great movement in there, but right now we're in a consolidation phase right here that comes along a couple times a year usually. So this is pretty dangerous trading in here for breakouts. from the last show. Just as an update, we've been bullish overall. Obviously, from 1183, we've seen 3,214 per ounce to the upside. A lot of other bullish calls in here. Then the trade below 43.8960. I said to get bearish. We've seen 488.3 from that. That was break back down below these highs and a number of other levels to get short below in here. All that's on hold because we broke back above this formation right in here, which now has us bullish. That came in at 39.7320. We've seen 55.5 of that so far, and it's just sort of meandering higher. If we fail below this formation right here, that's going to warrant a decent pressure. That's going to come in at 40, even 40, plus 3.5 per hour starting at 1:20 p.m. Eastern Standard Time. Decent trade above this formation right above here, which is going to come in at 40, 63.80, plus 8 per hour starting at 1:20. That'll warrant of continued strength. If we see a maintained gap higher on Monday, that's going to leave a medium bullish reversal below. That'll warrant a higher trade for days, possibly weeks, and possibly give us a run back for these highs up here. And then finally, the Bitcoin futures. We've been bullish overall in here from 16,275. We've seen 110,965 per coin. A lot of other bullish calls in here. Then we got bearish on the break below 124,228. We've seen 24,978 from that. And a number of other bearish calls in here. Those are all on hold because we broke back above this line right here at 1:515. We saw 4,515 to the upside before rolling over right here. So we're consolidating a bit. We were to break below this line right here at 99,904 plus 10 per hour starting at 1 o'clock p.m. That will warrant a decent pressure, but I would not short below there. We broke below there decently and back up through it decently. I would get out of shorts and get long, look for some decent short covering to come in. We break above these two formations up here, that'll be bullish. The lower of which comes in at 108.136 plus 12 per hour starting at that comes in at 108.136 plus 12 per hour starting at 1 o'clock p.m. Eastern Standard Time.
We have a question, Mike.
Yep.
Which is the best to handle the currencies? I mean, the crude oil and heating oil and the gasoline from the long side.
Which is the best what?
Which would be the best long? Crude oil, heating oil, or the gasoline? That's the question that he asked.
The heating oil has been the best over the past couple of weeks. I switch every day, or I update the valuation every day as to which one of those to be long or short. Give me 1 second. Let me just pull this back up. I'll show you here. I'd shut down the page. So every day I put a valuation in here as a positive, right, an equal and a negative. So whatever's positive is the best one to be long. Whatever's negative is the best one to be short. So if you were coming into today with that bias from yesterday's close at 45.41, you would have rallied up to 47.31. So you would have already seen 200 ticks more to the upside just being along that heap before it rolled over.
Wow, that's truly amazing.
Also, the other key thing is, I don't really show these very much on this show, but I do spread work down below here. So I analyze the cracks that are about.
Hey, listen, thanks for joining us, Mike, and your contact information is posted, so we'll hope to see you on another week or so, okay, buddy?
Thank you, sir. Thank you very much for having me on, Larry. Appreciate it.
You bet. Stay safe. Mike Moore, more analytics, folks. We'll be right back to wrap it up.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, here is the problem. It's a little bit of over-speculation over the last 16 years of this bull market. We are 3 times what we were with margin debt when we were with the dot-com bubble in 2000, the real estate bubble in 2007, and here we are now at 1.1 trillion. When they try to unwind this, it is not going to come down quietly, folks. It's going to come down very, very quickly, and you know how that ends up. So just be ready for it because it's coming. Right now, it's acting perfectly. If the markets close right on their lows today, you flat out don't want to be long the market over the weekend. There's a good 2 hours to go, and if they close right on their old kabuki, oh boy, get short and hang on because it's going to be really interesting to come in on Sunday night and Monday on what's going to happen if they close right on the lows. The reason I'm saying that is we hit all those targets. And if that's all we got was that little 2-hour rally, shut the front door and raise the rent. That's not very bullish, but there's still 2 hours to go. Maybe it closes right on the high unchanged and everything's looking great. But if it closes near the low of the day, don't be long the market over the weekend because things are popping here. Good news comes out. Qualcomm, the stock drops 10%. You know, it's a whole bunch of others like that. Other stocks are doing pretty good, but you got to be careful, folks. Remember, it's not how much money you make. It's how much money you don't lose. Therein lies the key. And if you did that and just followed that rule, you'll be better off than just about any trading system that you can. It's how much money you don't lose. Just pick the trades that are easiest, and always remember to never take the losing trades. It's very important. I love you, folks. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side on Monday.